What is the stat about how often we touch our face, at least before this whole situation?
I don't.
We touch our face some crazy amount of times per hour naturally, just by our reactions.
I totally believe it. It's
Yeah.
funny. Somebody said, I read, everybody's probably read this before me because I'm always last to know anything. But you see the meme that was like, your 401k is like your face, don't touch it.
I read that. I don't know if I saw a meme of it, but I certainly read it. But yeah, we don't realize that.
Yeah.
Oh, look at you, all prepared with your mug.
If I was prepared, I would have shaved. So, but
yes, I'm super cash today because my husband has taken over our bedroom and is working from there at my desk. So I'm in my t-shirt.
And we've been watching. It looks very comfortable. We've been watching other people's lives, and a friend of ours, Mike, who sometimes hangs out with us here. He had his kids running in the background. It was awesome. It was great. Yeah. Speaking to George Kurtica, who's going to be with us next week. By the way, talking about jobs, he'll be talking about the impact on small business. He and I have already been prepping for his appearance next week because what a guy to talk to during this, right?
Oh my goodness!
Just the small business piece of this is big. So that's going to be a huge couple shows with George. But anyway, George warned me. He's like, yeah, my kids might be running around. I'm like, that's great. Yep. That is fine. Who cares? Don't care at all.
Yeah. Look, I did some updates. I know you've been talking to local news right from the kitchen. And they were very impressed that I had a microphone in my kitchen.
You're like, thank you, Joe. Yeah, right.
Thank you, Joe. You got me ready. We were all ready to do this whole broadcasting from home thing. So, yes.
So today, everybody, we're going to talk about job stress. And both pieces today are going to talk about jobs. I know that a lot of people, of course, the big thing is talking about health, right? But once we get past health, a lot of people wondering, is my job safe? And I don't know that we have an answer, but we certainly have some good stuff for discussion. Two pieces by New York heavy hitting publications today, New York Times and Wall Street Journal. Like, sometimes we'll go to these crazy, TMZ or whatever when it's a slow news time.
Don't knock the New York Post, Joe. I love it.
And now we're going to go right to the big boys.
Yeah. Well, Joe usually brings the stories from, Financial Planner, from investing.com. And I'm always going to the sources that he just mentioned. But look, I've been asked for quotes from I think that one thing that's interesting is that a lot of the publications that are not financially oriented in their audience are reaching out and are trying to give their audience appropriate financial advice. I mean, you can see me quoted in places like Cosmo. I was asked for comment by some gossip magazines. I don't know if I made the cut or not, so I won't name them, but they are taking this, they are reaching that audience that, maybe is not going to be reading the publications that we're going to be sourcing today. So I think those publications should also be commended in that they are communicating relevant news, even in this time, in the context that works for their audience.
Sure. No,
such as it is, even the celebrity magazines, whatever.
And in defense of us, that's what's fun about the show.
Right.
We've got, we're all over the place. You never know what we're going to talk about tomorrow, but actually we will tell you today, Monday, it's going to be jobs.
Yeah. This is basically, we're doing two related shows. It's basically a 2-part show looking at two different sides of the employment picture.
Jobs. All right. Let's go ahead. Hey, we got Chris here. Looks like it's just us and Chris hanging out. But Tina just went to social media, and we'll see about she tells Gertrude to get round up the troops because we're ready to go. Okay, ready to make a podcast?
Yes.
This will be for Saturday, the 21st of March.
The coronavirus pandemic and the impact on the gig economy. What now? That and so much more on this edition of Money with Friends. Welcome to the Money with Friends podcast. I am certified financial planner, Bobbi Rebell, host of the Financial Grown Up podcast, coming to you from my very grown up kitchen in New York City.
And coming to you from my mom's half-finished basement where we were quarantining before it was cool, I'm Joe Salsihai.
This is the Money News Show that includes commentary on recent headlines and stories with thought leaders from across the financial landscape. We break those stories down into what matters to you, our friends, and we leave you with a takeaway to make it your own.
It's well, Bobbi, before I get to the fact that this is brought to you by Tiller Money, but we were also 6 days a week before it was cool. A lot of podcasts
Yes.
ramping up the number of shows that they do, the amount of stuff they do. We've been 6 days a week for a
Yes.
good long time and no plans on changing that.
Yeah.
Today's show brought to you by Tiller Money, your financial life in a spreadsheet automatically updated each day. Only Tiller Money automatically updates spreadsheets with your daily spending, account balances, and transactions so you can track everything in one place with the greatest control. You know what you can do while you're quarantining? You can get your financial house in order, and it starts by tracking your money. If you use Tiller Money, you can try it out for free for 30 days. But if you use our link, tillerhq.com/MWF, you'll also get 20% off your subscription when you decide that, like I did, that it's awesome and you should be using it. So that's my commentary. But
Well
lots of
said.
commentary today on jobs, Bobbi,
Yes.
and some general ugliness, obviously, in the job market, people wondering about their jobs. So let's jump into this. Let's see which one of our friends is going to help us kick off today's show.
Today's headline we bring you from the New York Times. It is by Kate Conger, Adam Satariano, and Mike Isaac. Pandemic erodes gig economy work. Gig companies promoted their flexible hours as an economic lifeline for workers. In the coronavirus outbreak, it has been anything but. And it starts out with the locator in San Francisco. It was just after 11 a.m. last Wednesday when Jamie Maldonado, 51 years old, pulled his rented Nissan into a lot outside San Francisco International Airport. He figured he had a long way to head, about 2 hours before Lyft would ping him to pick up a passenger. And then it goes into the atmosphere of the jets roaring ahead and how he was killing time, looping his mask that he recently started wearing around his wrist. I'm not sure if that's a good idea. And went to talk with other drivers. And he's wondering out loud, what am I going to do to pump gas and feed my kids tomorrow? The number of typical rides for him has dropped to around 50 from 100 just earlier in the month. And his payout, of course, also fell to about half, about $600 a week, from which Lyft would subtract the rental fee for his car. The coronavirus pandemic is exposing the fragile situation of gig economy workers, the Uber and Lyft drivers, food delivery couriers, and TaskRabbit furniture builders who are behind the convenience as a service apps that are now part of everyday life. Classified as freelancers and not full-time employees, these workers have few protections like guaranteed wages, sick pay, and healthcare, which are benefits that are critical in a crisis. While gig economy companies like Uber and DoorDash have promoted themselves as providing flexible work that can be lifelines to workers during economic downturns, interviews with 20 ride-hailing drivers and food delivery couriers in Europe and the United States over the past week showed that the services have been anything but that. Instead, as the fallout from the coronavirus spreads, gig workers' earnings have plummeted, and many have become disgruntled about their lack of health care. Many others are also feeling economic pain from the outbreak. Layoffs have hit workers in retailing, airlines, hotels, restaurants, and gyms. But even as public health agencies have recommended social isolation to insulate people from the virus, gig workers must continue interacting with others to pay their bills.
They've got no social insurance at all, said Senator Mark Warner, a Democrat from Virginia, who had proposed federal legislation to provide benefits for the estimated 15 million Americans who depend on gig economy jobs as their primary source of income. A large swath of workers will be left with nothing. In recent weeks, some gig economy companies have responded by offering basic sick leave provisions and cleaning products like hand sanitizer for drivers. Uber, Lyft, Instacart, and DoorDash said that they would pay workers for 14 days of work if they have a coronavirus diagnosis and need to stay home. Uber and Lyft also said they provide cleaning products, though they have struggled to place mass orders and distribute the products to drivers. Postmates, DoorDash, Uber Eats, and Grubhub also have introduced a no-contact delivery service so drivers can leave food orders on the front steps of a customer's address without interacting with them. Not every job can work from home, and certainly this is the reality for our drivers and couriers who need to pay their bills. Andrew McDonald, an Uber senior vice president who oversees global operations, said in an interview, what we're trying to do is make that experience as safe as possible. The piece goes on, Bobbi, to talk about some of the struggles that these companies have had. And obviously, when you're a small startup, I mean, and not even a small startup, a big startup, but companies like Uber and Lyft, it's no secret that they've been losing money hand over fist. I mean, you know, they built the whole house of cards, I guess, on their trajectory. And now that rides are down and people aren't traveling as much, the trajectory doesn't look as good. It becomes difficult for them and for the people that relied on them.
Absolutely. And it also becomes, a very precarious situation for the workers because so many of us are being told to self isolate, to keep social distancing, but it's not that easy for many of these workers, especially if you're in the delivery business and if you are driving a car of some sort. Obviously, they're taking some precautions, but there are limits to that. And if you're only getting this financial help from the companies if you are actually diagnosed, well, they can't even get a test in most cases unless you have very severe symptoms. So that's kind of an after the fact thing. It's tough. And the truth is that what the gig economy has been so wonderful for is to create additional income when someone's primary job is not paying enough. It can create a secondary income stream, which is something we've always advocated here, that it's always good to have different income streams, ideally unrelated, so that you have that diversity of income. But that also has these obvious downsides.
It's funny. We've talked about this before in better times, and this is always a tough time to talk about this because I don't know, frankly, I don't know right now what you can do except plan for the future. And it's easy and trite to sit and go, well, we said before that this wasn't the end all be all, but and that just sounds so like my mom. Uh,
Mm.
I uh, I don't want to do that. But what I will say is that I've been through this is my third downturn. If you count the 9/11 thing, this would be number 4, right? We had the tech wreck. We had 2000 to 2002. We had the Great Recession. I don't know what we're calling this yet. My vote, kind of snarky, is we call it my Corona, like my Sharona, like the song. No, don't
No,
want to call it that.
no.
Okay. But I haven't heard a name for this yet. But every single time that I've been through one of these, I have to use a time like this and use it to see what things are like when we get to worst case scenario. And then when we get out of it and we're beyond day by day living, which for a lot of people, as you can see, it's where's my next meal going to come from, right? How am I going to deal with this? And I was there. I had to become a paper boy to make money. I was up at 4:00 in the morning. There was no gig economy. That was the version of the gig economy. I'm like, nope, doesn't pay enough, but it pays something. So I'm out there at 4:00 in the morning, freezing my ass off, avoiding dogs at all cost, in the middle of January. And my big lesson was I need to start building something. I need to build something that I own that's not that isn't dependent on somebody else, so that I can have revenue coming in, or at least I control my revenue. The big thing I worry about Uber and Lyft drivers and Uber Eats and all these people, they're still really dependent on these companies. I mean, I know the companies are depending on customers, but
Right.
they're depending on these companies to do the right thing instead of being able to just say, here's the way I'm going to run my company. Here's what I'm going to do.
Well, I think most companies do want to do the right thing as much as they can, both for altruistic reasons, but also for business reasons, because they do want their employees to be able to come back when, hopefully, and I believe we will all recover from this. Maybe not quote exactly the same, but I do believe that we're strong and we'll come back. So you want to stand by your employees as much as possible and do the most responsible thing. Some companies that have laid people off have said, for example, restaurant owners, we're doing this because then they can collect unemployment and we're going to take all of the food that we have and we're going to be giving it to our employees, first the perishable and then the long-term food that we'll be giving that to feed our own employees, but we want them to be able to get unemployment benefits. So that's why we're doing the layoffs as quickly as we are. I also think it's important to think about the general characteristics of the people that work in the gig economy. They're generally hardworking, very enterprising, motivated by a lot of the things that you just talked about, that they want to control their income. A lot of people were drawn to places to work for employers like Uber and Lyft because you can set your own hours. You can work as hard as you want to, or as maybe as, just do it as a little bit of a side thing for a little extra cash when you feel like you want a little money to go out that weekend. And I think that's something that should be applauded, that people do work very hard in a lot of these things. And they are often secondary jobs that people are doing to better their lives, and they're working for it, versus people that just kind of sit in their regular day job and phone it in. So I think these people should be at least understood, the vast majority of them. that they are working really hard.
And it's funny. I feel like more people are going to turn to the gig economy to help them out as their main job, maybe struggles for a while.
Yeah. And look, yes, it does not have health insurance and all those wonderful benefits that we now are appreciating more. And maybe younger people that were drawn to the gig economy because of the lifestyle freedoms that it provides now will also take into account the support that full-time work offers them. And maybe that will shift the values. Maybe it will shift our society back to different kinds of systems that were popular a century ago, where maybe we'll decide that as a nation, we don't want to have defined contributions as much as we want to have defined benefits as a society. And that's something that can change culturally. And it's something that maybe, the government could change going forward. These are things we take for granted, that we've moved to this contribution model versus defined benefit model. Maybe that's something we as a country will revisit. It's not so far-fetched.
No, well, even the creator of the 401k said that it wasn't meant to be kind of what it is.
Three-legged stool.
The end all be all, right? I mean, now it's really, it's much more the one-legged stool. But it's funny. I'm just thinking of, as a financial planner, historically, what we'd always look at was, are there opportunities to earn more money? A lot of bosses during good times say they're happy to give you a raise. You just don't ask. Women, especially, you've seen the statistics, Bobbi, more than I have. Yep. Women especially are afraid to ask. They're afraid to rock the boat.
And they also get turned down a lot. I was turned down quite a few times and just kept getting fancier titles.
Yeah.
I've talked about that quite a bit.
Yeah, no, so making more money is something we focused on, but in this area where you're finding now the make more money train is getting tougher. This is where that other side of the equation, the focusing on your expense side, helps. Mm-hmm. We just saw, as we're recording this on Friday, we just saw that it looks like tax day is going to be pushed back to July 15th. Obviously, if you're getting a refund, you want to get that money as soon as possible and put it in a safe place and dole it out. This is not, this isn't party money. Like you and I were talking about before we went live, this is money to live on. If there is a government benefit, we just saw yesterday afternoon, the Senate, another piece of their legislation says maybe there might be some checks coming for people, $1,000 per adult, $500 for children. That might be coming. If that comes, once again, not the right time to well, where are you going to go? I was going to say not the right time to go to Disneyland, but you're not going to Disneyland.
Well, the truth is that, when in a quote more normal recession, it affects different people in different ways at different times. And to some degree, that's still true, but we're sort of all experiencing this together. And people say it's an economy of one. So let's say a more typical recession, you lose your job, maybe a few of your friends do, or have lower income, whatever, but some people are fine. There's this kind of mixed bag. And some people might sort of be living, you kind of see the Joneses still doing certain things. In this case, nobody's going out to dinner. Nobody's shopping, I don't think, for new clothes to go out and so on. Nobody's going to the gym. Everyone's home. A lot of the opportunities to spend money that you may have thought of as necessary are gone. You're probably not going to get a haircut. You're not going to get your nails done. All these things that add up. So many of our expenses are just gone. The only expense we really have is food. And, general paying your bills, of course, that are due, which if you can, you should absolutely do. And if you can't, one thing that I've been saying when people have done interviews with me is communicate. If you can't pay a bill, don't just not pay it. Communicate with the person you owe the money to or the entity, and they will, in almost every case, work with you. Don't just ghost somebody.
Especially right now.
Yeah, just communicate and say your situation. And pretty much all the financial institutions, I think, are getting on board and working with people.
The another thing is look at your interest rates. We just had the Fed cut rates again. Immediately, that helps with your car loan if you have one. It also
HELOCs.
With what's that?
Your HELOC.
Yeah,
line of credit.
Yep. Helps with that. Helps with credit card, revolving credit. You won't see your credit card interest rate if it's a revolving rate. You won't see it come down right away. Usually those are on a quarterly basis. They will readjust those. But consolidation loans, if it's time for you to start living a cash lifestyle and cut up the credit card because you've been mishandling them, now's a great time to do that. And then, tangentially, we've also seen the treasuries go up, which means interest rates on treasuries have come down, and that means mortgage people are busier than ever. And talking to some mortgage people, Bobbi, they've told me, and I've heard colloquially, that you need to get in line because the lines are long to refinance your house right now, and it might take them a while to get back to you. So, but get in line as soon as possible to get that done so that you can start saving some money also on your mortgage.
Yeah.
Two things. Number one, we do this live with some friends on YouTube today. If you want to join us, head to our YouTube channel, which is Money with Friends. Just put Money with Friends in the search engine there. Click on subscribe and you'll see us when we go live. Kelly says that she's finding her business is recession proof, but she's not sure about Corona government shutdown proof. I think this is a whole new world, Kelly, isn't it, Bobbi?
Mm-hmm. Yeah, definitely.
It's definitely a whole different place. And Chris is with us, says social distancing and getting money while you're laid off is a great privilege. That part that kills me, so many of my family members' income not protected is they're protected themselves from the coronavirus. That's true. A lot of people, by the way, in the gig economy, and we reported just a little bit on this before, but a lot of people don't do the right math when they go to work for one of these companies, and they don't think about the depreciation on their car, and they don't think about the gas cost, the cost of their time. Like, they don't think of all of these tangential costs that businesses do. And Lyft and Uber, no, they're not giving you a phenomenal deal when you go drive for them. But a lot of people think, just looking at the top line costs, like, well, heck, I can make X amount of money. A lot of that goes back to the cost, whether short-term or long-term. So you got to do some better math there. Great point by Chris. Ashley also says our electric company just sent an email about how they're willing to work with people and will not be shutting off power while this is going on. But Bobbi, to your point, you got to communicate with the electric company.
Exactly. I think everyone, as I said, the big thing that is different about this, assuming it, we do predict, people are saying it will be a recession. Of course, to actually call it a recession, we have to have 2 quarters of negative growth, I believe. So that hasn't happened yet. But this economic situation is that it is happening simultaneously to so many people at different levels, but also at the same level in many ways, which is unusual that we are all experiencing the same thing at the same time. By the way, speaking of Ashley did get us a gauge on our money friends on our Instagram. She asked on our behalf, this is our producer, Ashley, who's here with us. Have you been working in the gig economy recently? And I was surprised actually at our audience's response. How much of our money friends, how many of them, what percentage are working in the gig economy?
I'd say, knowing what hustlers our friends are, that it's got to be 60 to 70%. So I'll say 65%.
No, it's actually just the opposite. Only 29% said that they've been working in the gig economy recently. So a lot of our many friends have full-time jobs or are at least not working in the gig economy. And we did get just a couple comments on that. Basically just asking about, what the future of the economy is. And Annette says, I hope it will be back to normal soon. And just a lot of, that's in response to what changes will the gig economy see. And,
Yeah.
and Jackster says he just doesn't know. I mean, I think that's very accurate. It says it all. We don't know. We just don't know.
Yeah. I think getting comfortable, being uncomfortable, I think is ugly. I don't know if you can ever be completely comfortable, but how do people help us make the show, Bobbi?
People can follow us on Instagram at Money Friends Pod. That's also our handle on Twitter.
Awesome. And in just a second, we're going to have our big take-home idea. But while Bobbi gets ready to completely blow us away with hers, I want to talk just a second about Tiller money, because Tiller is a great thing to spend time looking at while you are quarantining at home. Tiller is based on spreadsheets, and I like the Tiller Quick Insights, which shows what new transactions have come in because of the fact that my spreadsheet automatically updates with my bank, my investment accounts on a daily basis. I can look at my largest outflow. I can look at where my money's coming from. I can look at who I pay the most, areas of my budget where I'm over budget, under whatever it might be. I can do it at Tiller because of the fact that it is a spreadsheet. And the cool thing is you don't have to be a spreadsheet pro. A lot of people in the Tiller community like making spreadsheets, and Tiller has found some of the best ones, and you can start off with those and then personalize it to your heart's delight. So check it out. It's tillerhq.com/MWF. Use our link, by the way. So after you test drive it, you'll get 20% off your annual subscription. So thanks to them for working with us, and thanks to you for using our link. It helps you, but it also helps us keep podcasting when you use our link. All right, Bobbi, what is our big takeaway for today?
I have a heavy heart for these gig economy workers. These were income lifelines when, for example, a person is out of work or needed or wanted to work a little bit harder to make more money. The vast majority of these workers have the best of intentions, but the nature of this recession is so widespread. Its impact is unprecedented. No one has done anything wrong. And let's all just hope we find a way out soon.
Yeah, I feel like everything I could say too would be trite, but I think that there's a guy, Robert Allen, who for a long time was a big real estate guru, and he always said that there's two doors in life. There's the security door, and there is the opportunity door, and whoever reaches for the security door gets neither. And you should always reach for the opportunity door. And I feel like people looking at the gig economy, we're looking at the opportunity door. But I will say the opportunity door also is fraught with a lot more risk. And rather than work for somebody else, maybe this is a good time to begin setting up the foundation if you have time and if you have energy. And I know there's some people that are going paycheck to paycheck and don't have time or energy to do that. But even then, and I remember those days for me, my thought process while I was out there delivering papers, Bobbi, was always the second I get a free moment, I'm going to start building something for myself. So I have more opportunity, maybe less security, but I'm not relying on somebody else's decision-making.
Yeah, it's tough though. It's really tough. And I feel for people. And I love what Kelly is saying here. Her motto is to acknowledge the struggle and recognize the strength. So I applaud everyone that's doing their best in this situation. It's tough. And
Bobbi,
most of this is not anyone's fault.
Yeah, we're going to sit on this topic through the weekend, because on Monday, Bobbi and I are going to be back talking about the other part of the workforce, which is a headline from the Wall Street Journal that says the job shock begins. We'll talk about that on Monday. We'll see you guys back here. On behalf of Bobbi, I'm Joe. See you next time.
Bye, everyone.
I didn't know where to go with it.
Yeah, I know. I'm so sad. People. I really do believe that, by the way, to our YouTube audience. I think that most people working in the gig economy either were, doing it because they lost their job and needed to, scramble to get income, or they were trying to just better their situation. I mean, this is not a lazy person's kind of thing. So, yeah.
We're going to hang up just for a second so that we create a new YouTube video. So these are separate videos, and Bobbi and I will be right back, like literally in less than a minute.
1 minute. These tapings.
So. It is. We struggle with it. Gertrude and I struggle with it this week for Facebook Live, and it didn't work a couple times. And I gotta, by the way, send you a link, because BeLive sent me something that, if this is such great online chatter for everybody. Hey, everybody, Bobbi and I talk behind the scenes, but if for some reason it says something went wrong, there's actually a link that you press and it makes it all good. So, but I would have never known that.
I'm sorry to hear that. Chris is saying a lot of the financial Facebook groups are getting snarky. That's not nice.
Chris, I'm with you.
Really?
And, well, as part of what we do with Stacky Benjamins, I'm in several groups, and it's judgy and nasty and just not fun. I can't say that the basement group is perfect, but man, I actually know a sponsor of ours over there who I'll mention, Haven Life. We've been working with them for a long time. And Brittany, do you know Brittany?
I don't. Yes. Oh, I'm sorry. I do know Brittany. Of course. Yes. Yeah.
Brittany's fantastic. One of my favorite people. And she and I meet every other week, and we talk about what's going on in the life insurance industry, what's going on with podcasts, but even more than that, we share all kinds of stories. But she even said last week, she's like, to your point, Chris, she's like, the one thing I haven't stopped looking at has been the basement Facebook group, because it's so damn funny. Like there are so many jokes in that group. I see people panicking, people judging each other. And then I go to our group, and once again, not perfect, but oh my goodness, people by and large taking a stride. Another group that's been really good has been the Afford Anything community. Paula's community has been really supportive and better. So if you want to talk finance, I would say try those two Facebook groups are good. All right. Let's make a podcast. This will be for Monday. What's the date on Monday? 21, 22, 23. Had to almost use my fingers. All right. This is for the 23rd of March.
When it comes to staying employed, is anyone safe right now? We talked Saturday about the gig economy workers, but what about those with full-time jobs? Are they going to be okay? That and so much more on this episode of Money with Friends. Welcome to the Money with Friends podcast. I'm certified financial planner Bobbi Rebell, host of the Financial Grown Up podcast, coming to you from my very grown up kitchen here in New York City.
And coming to you from outside Detroit, Michigan, where we're following the news minute by minute so you don't have to. I'm Joe Saul-Sehy. Hi.
This is the Money News Show that includes commentary on recent headlines and stories with thought leaders from across the financial landscape. We break those stories down into what matters to you, our friends, and we leave you with a takeaway to make it your own.
And Bobbi, we were 6 days a week before it was cool. Just want to put that out.
Again. You're so cool.
Big thanks to Joust for supporting Money with Friends. Joust is the nation's only all-inclusive banking platform for the self-employed. Man, we talked about the self-employed on Friday, and what a time to make sure that you've got the right partner banking-wise in your corner. PayArmor, Joust invoice payment guarantee product, supports the 71% of the gig economy workforce that experiences not getting paid, which if you can imagine that, you could definitely imagine that during this crisis. You can sign up for Joust for free at try.joust.com/MWF and enter the promo code Money with Friends. You'll get $100 in credits. That's try.joust.com/MWF. And just to pull back the curtain a little bit, Bobbi and I have been working on taking this joint project and making LLC of Money with Friends. Mm-hmm. And got that done this week, and we're opening our Joust account because if there's ever a time that we need a company like Joust, I'd say it's probably now.
I think so. Yes. I think there's, if there was ever, first of all, there's always been an appreciation. You and I both have clients that I have great clients. My clients pay me. I think they're wonderful, but you never know if you're going to have a new client that's not reliable, and having Joust in your corner is a good idea. For sure.
Whether it's you're a gig economy worker, you're just doing a small startup on the side, or you're full-time with a bunch of employees, why would you, if you have a business, why would you not bank with a company that is in the business of working with businesses? Like, I don't know why you wouldn't do that. Speaking of business, we're going to talk about obviously problems on the business front. What does that mean for employment for all of us? We'll talk about that here today, but let's see which one of our friends is going to help us kick off today's show. All right, this piece comes to us from the Wall Street Journal, and it is written by Justin Lahart, and the title is "The Job Shock Begins." Justin writes, America's job market just got a hammer taken to it. How it fares in the days and months ahead and what policymakers are able to do to blunt the distress of workers and their employers will determine how bad the recession will be and how healthy the economy will be in its aftermath. Labor Department on Thursday reported the number of U.S. workers filing new claims for jobless benefits last week jumped to 281,000 from 211,000 a week earlier, much higher than the 220,000 forecast by economists who've struggled to update their estimates quickly enough to keep up with a rapidly deteriorating situation, marking the biggest single jump since 2012 when Hurricane Sandy's aftermath sent many workers home. Next week's report will be far worse. Thursday's report reflects claims through the week ended last Saturday before California's Bay Area was placed on lockdown in an attempt to mitigate the spread of the new coronavirus, when many school districts, including New York cities, remained open, and when the number of confirmed COVID-19 cases in the U.S. was significantly lower than today. Some states have reported a massive increase in filings this week.
And by the way, all of California now is on lockdown as we read this. Job hit. Initial claims for unemployment in, excuse me, my story is a little bit jumbled. The number of people continuing to receive weekly unemployment benefits after initially filing rose by 11.5% above the minimum level over the past year. A recession is in the offing. Similarly, the SAHM rule, named after economist Claudia SAHM, Sam, I guess you say it, says that if unemployment rises 0.5 percentage points above its previous 12-month low, the economy is in a recession. Both Deutsche Bank's measure and Ms. Sam's will soon be breached. And the only real question is how quickly. Already, many economists, including Deutsche Bank's, are forecasting that in the second quarter, gross domestic product will experience its sharpest drop since the end of World War II. The more people who lose their jobs, the more people will struggle to pay for their needs, magnifying the toll the pandemic has placed on the economy. Unemployment benefits and other measures will help them bridge the gap between now and whenever the crisis passes. But they will need workplaces to go back to. Lacking support, many otherwise healthy small businesses will fail, and the jobs they provided will disappear permanently. As frightening as Thursday's number was, it is merely a preview of how bad things are going to get.
Sadly, Bobbi, I believe that. I was watching some very compelling charts about the spread of the virus, and by all indicators, we're a good 2 weeks away from really the worst of this. And obviously, I don't know anything about anything. I'm just following what I'm reading, but I think when it comes to financial planning, thinking that it's going to get worse before it gets better, and then hopefully it does get better, is way better way to plan than the opposite, right? Thinking it's going to get better overnight and then it doesn't.
Yes, I think that, we kind of plan for a worst case scenario in this case, unfortunately, but we can still hope for the best. And as we're recording this, there are reports that some medications that were previously used for other illnesses may be effective. They don't know for sure, but I think that there's enough safety in these medications that they can try them at least and just see what happens. And that's hopeful. I think that because we are behind the rest of the world, other countries are further along and looking for cures and vaccines and treatments. And that gives me hope. And I think an important line out of this is to talk about the fact that we want businesses to be there to rehire workers when this ends. And I do believe this will end. So we want to support those business owners and understand that they are making very tough decisions. Many service businesses like restaurants are saying, well, we're laying off workers so they can collect unemployment and so that we can be here and rehire them. This is not something that was, for example, they talked about Sandy, that is affecting certain regions. Obviously, certain areas have more cases than others, but in terms of business impact, it's countrywide, it's worldwide. And so we don't have these little pockets of weakness. It's really everyone. And that is what is so devastating.
That, there's a short-term discussion. I think we had a lot of that short-term discussion on the Friday show, and a lot of people should go back and listen to that, about decreasing expenses, looking for ways to maybe refinance your debt if possible, to work with the people that you owe money to. So in the short-term cash crunch, I think there's that. There's also a longer-term discussion here, Bobbi, which is that a lot of the time when people are looking at jobs, they focus on which one will just pay me more money. In fact, studies have shown that people don't even look at benefits, when if you do the whole benefits package, sometimes one company will pay a little less in your paycheck, but they'll give you a benefits package that ends up making it much more worthwhile. But the stability of the company also matters when you're looking at your company. And I think that during good times, we kind of underplay that. And we're seeing that now, that how stable is this company? And even though they're paying me a phenomenal amount of money today, are they going to be able to continue to pay that money to me if things get rough?
Right. And that's why we see a lot of people on television talking about the fact that companies used money to do buybacks on their stock rather than shore up some kind of emergency fund for this. That said, many very well-run companies in industries that have been impacted are getting hit through no fault of their own. No matter how well you prepare for something like this, you cannot
Sure.
possibly be prepared for something that is so industry wide, affecting everyone up and down the supply chain. So it's also important to understand that just because a business is struggling in this situation does not mean that they were not doing everything conceivable. Sometimes there's only so much that you can do. Many businesses run on small margins, and there's only so much that they can have as a backstop. Some businesses were already struggling. Look at all the brick and mortar retail stores that were barely holding it together as it is. And of course, we can say they should have had coulda, woulda, shoulda. But the truth is, businesses make the decisions they make, the best decision they can make for their business in that environment. These are lessons learned, though. I worked for 15 years for Reuters, which has a union, and I was paid less in cash than my peers at other places because we did have wonderful union benefits, very, very good health insurance. We had amazing matching in the 401k, which my 401k is probably, I'm doing good. I'm not looking at it, but that money is obviously gone down in this, but I benefited from having a very generous employer in terms of the match in my retirement funds for so many years that I no longer get as a self-employed person. But all of those benefits were great. And I'm happy to say that I took advantage of a lot of them. I got my CFP paid for by an employer because that was an educational benefit. So those benefits definitely do create value for employees, and they should be appreciated.
Yeah, and I definitely agree with what you're saying at the front of that, though, that nothing is infallible, right? I mean, there's always an Achilles heel. Every strategy has a downside. Clearly, who could predict where we're at today? It was amazing. Cheryl and I, by the way, this morning we're out on a 5 mile run, and we were talking. We were with a friend. We all kept our distance from each other while we were running, but we were talking to each other about how great it was that we could get outside. And then we talked about how horrible it would be. What if this were, I mean, don't get me wrong, coronavirus, my understanding is it is a little airborne, but what if you couldn't go outside? Oh my goodness.
Well, that's what's happening, I believe, in places like Italy, where if you have a lawn or a little private, balcony, you can go out. But I believe you cannot go outside anymore in Italy. So let's hope we
Yeah.
don't get to that point. But that is also a possibility, and we realize how much we value the simplest things. I was joking with my husband this morning. I said, "When can we schedule our walk?" Because that's become my favorite part of the day is going to Central Park with my husband.
Are you finding, by the way, and I know this is off our current topic, but are you finding that even early on, you're starting to develop like a new routine around the weirdness, and that I feel like it's going to take people maybe 2 weeks, but I think 2 weeks from now, where families will develop a new routine, and we'll have a new routine around being at home, being together. It's going to be a whole different world.
Maybe. I mean, maybe in 2 weeks we'll have changes and we won't be in this situation, but if we are, I do agree we will. And I think there's a new appreciation for things that we used to joke about getting a break from. We want to see our coworkers, our friends. My sons had they do a regular sports class, and they had a virtual meeting last evening, and seeing my son's face light up when he saw some of his buddies on this like giant, I think they were on Skype, and you could see the kids' faces all light up when the instructor came on, and they were a little bit rowdy, and I think he had to mute all of them, but they were really happy to see each other. It was really cute. And I overheard him talking to one of his friends from school on a FaceTime chat, talking about how much they miss school, and they were going to be on spring break right now, so they're not having any homeschooling right now because this was spring break. So
Yeah.
they were talking about how they're looking forward to when school starts up again and what's it going to be like to go to school over Zoom. So they really, not that my son enjoyed school anyway, but there's a real new appreciation for how much they love their friends and their teachers and learning.
I saw a photo of and somebody wrote that it was a bunch of dads, and they were at a cul-de-sac, and everybody was kind of at the end of their driveway, and each of the dads had a beer, and they were standing way far away from each other, just having some guy time out at the out at the end of the driveway.
Yeah.
Interesting how communities find a way to come together. But back to this, what what I think is kind of a takeaway here is that we'll get to our big takeaway later, Bobbi. But when it comes to so what around the job market and around your job is this idea that that to the degree that you read every day about some people still not taking it seriously, I don't know what people need to take it more seriously when it comes to the health aspect. And clearly that's not our lane, but let's talk about the financial aspect.
Mhm.
If if we're really planning, I think that looking at this getting worse versus better anytime soon is great. Buckling down on the budget, buckling down on the amount of outflow that you have every week, and definitely controlling your spending, controlling the amount of money that leaves the household, doing some sort of financial rationing, I think is it to put it in the probably the worst term possible, is a great idea, is a fantastic idea here because we don't know when it's going to get better.
We don't know, but I think what is, I don't know how to really phrase this, but what makes it more palatable is there's not a lot to buy, Joe. I
There is a
mean, beyond food, really, I think our whole mindset about what's discretionary and what's not, because I think if we looked at somebody's budget and what was really discretionary, let's say if they had lost their job but everyone else was still employed, they might have things still on their list that they felt were important. Even, for example, I hate to say it, things like clothing to go out and interview for a job, things like that. No one needs new clothes right now. I'm sorry. And I know that stinks for retailers that want to do business, but nobody needs a new outfit. Nobody is going to gym. So a gym membership to stay in shape, even when you're unemployed, people might say, well, that's still a necessity, health and this and that. Well, your gym is closed. So you're figuring out, Joe's going for hikes. I'm walking in Central Park with my husband for now. I'm doing virtual exercise classes, and so on, which I'm paying for, but that's because I want to support my gym. But you can do a lot of free exercise classes. So
but it's not a time to pay extra money on your debt. It's not time
no,
to
no,
pay
no, no,
extra
no. The point
money
is that all those things that you may even thought of as sort of necessary slash discretionary
yeah.
are gone. You are not meeting anyone for lunch to network to get a new job, whatever it may be, whatever situation you're in. Everything but even maybe your mortgage. It's just really food. If you can't pay your mortgage, just talk to your lender. They'll probably work something out. Really,
Stories.
everything's gone away, all your expenses. Most of
Absolutely, absolutely, yeah. Go back to everybody should go back to Friday's episode because we talked about refinancing your debt. You should be doing all that to lower the payments. But you know, I'm reading about people who are living off of DoorDash now. Don't be paying the premium for DoorDash when you're not sure where your job is coming from tomorrow, where your food is coming from tomorrow. Don't please don't. Um, did we do anything on this topic on Instagram?
Oh, yes, we did actually. I sent you the answers. I completely
Of
forgot.
course.
First, we asked people, well, let me ask you the question. We said, people, when it comes to staying employed, is anyone really safe right now? And the answers were, of course, or no way. So, what do you think our money friends said? When it
I
comes
was
to staying
pulling up
employed,
the
is anyone really
questions and
safe?
it's horrible, but I was pulling up the questions and I didn't hear the main or the responses and
Okay.
I didn't hear the question.
Okay. The question is, when it comes to staying employed, is anyone really safe right now? The answers were, of course, and no way.
I would say that there's probably 30% of course.
You're correct on the direction. It was a little bit higher. 46% said, of course, and 54% said, no way. And do you have the answers that I sent you? Some people expanded
Yep.
on their answers.
Eric AHR6 says everybody's going to need banks, mechanics, hospitals, police, and fire. Debt Free Now says even nurses are going to be let go if they only work with elective surgeries and not in ER capacity. Our friend David says healthcare is an extremely safe industry. The Anetter says, what if the internet comes to an end? I believe anything's possible now. And has a oh no emoji. And then John says, so many businesses don't have emergency funds, need revenue. I think that's an important one, especially small businesses. So many small businesses, as you know, Bobbi, are underfunded, which is why, you know, I mean, we talk about Joust and needing to be paid.
Yep.
I think, man, that's important. And then I'm trying to read Logan's and I can't read it.
It depends on the industry. Some companies are even hiring, which is true. Especially places that supply the goods and services that we need. I believe Walmart is hiring. I'm guessing Amazon may be hiring, I think, but a lot of those companies are looking for workers. So, you know, it's important if you do need cash flow and you can do work for them, maybe that's something to look into. We also have L. Wyant saying nurses, doctors, pharmacists, cashiers, truckers, stockers, trash collectors, and college professors for now. May
Yeah.
have safer jobs.
Yeah.
So thank
Yeah.
you to our money friends that answered that. And thank you to Ashley for posting that.
And our Instagram, if people want to take part in these in the future, is
at Money Friends Pod, and that is our handle both on Instagram and on Twitter at Money Friends Pod.
in just a moment. Bobbi and I are going to have our big takeaway to end today's show. And as we give her time to think about that for a moment, we'll say a big thanks to Joust for supporting Money with Friends. If you ever thought about starting your own business, perhaps you wanted to begin a side passion project, you weren't sure where to begin, though. Ensuring a steady income is always going to be one of the first things you think of. And we talked about that a lot the last few days, and could be the reason why you don't eventually take the leap. Well, Joust is the nation's only all-inclusive banking platform for the self-employed. Business banking can feel complicated, but Joust makes it easy. PayArmor, Joust invoice payment guarantee product, supports the 71% of the gig economy workforce that experiences not getting paid. You can sign up for Joust for free at try.joust.com/MWF. When you enter the promo code Money with Friends, you're going to get $100 in credits. That's try.joust.com/MWF. And we've talked about Joust, man, a lot today, but good time to have a great banking partner if you're a small business owner, whether it's side gig or whatever. Bobbi, what's our takeaway here?
Believe the data and prepare for the worst. But I am an optimist, and I still hope we can keep a lot of us working and support those who aren't until we can all get back to work. Anything that you can do to support business. If you have a membership that is affordable to you, for example, to a gym, to a co-working space that may be closed, that you know is owned, especially if it's a small business, and I want to caution this because Joe pointed out very accurately, you should, of course, if you can't afford it or you're worried at all about your financial situation, you should not be ordering DoorDash. But if you are in a very comfortable position and you can support other businesses, consider it. Do what you can to support other people. It really can make a difference.
I totally agree. And my takeaway was, when I was a financial planner, we would always plan for the worst and hope for the best. When it came to investment returns, we'd always plan on low returns so that we would do more ourselves. We plan on cutting cost a little bit below what we really needed to cut, just in case things got worse. We would plan on not getting the big bonuses we thought we were going to get. We'd always plan for less. Well, if there was ever a time when planning for less was a great idea, that is right now, because, and I hate to say this, but I do think the next couple of weeks it's going to get worse before it gets better. But then after that, Bobbi, I look at some of the things you pointed at with medicines. I look at a comment that, as we record this on Friday, that Bill Gates talked about, and he's surrounded by scientists, said this might be over quicker than we think. Like, I look at the optimist inside me says maybe, but don't plan on that. Hope for it. Don't plan on it.
Yes. A lot of lessons learned and a lot of new appreciation for things that we took for granted.
Hey, thanks to everybody for hanging out with us today on YouTube. Kelly and Chris and everybody else hanging out with us. We're making these increasingly over on our YouTube channel, so check that out. It's at youtube.com. Put in Money with Friends and you'll find us there. Subscribe to us. You can also visit our website and find out about all our awesome sponsors and our contributors, the people that we make these shows with. It takes a village, as somebody said once time, to make 6 shows a week. And there's no time that I'm more proud of the fact that we do the 6 days a week than right now. And if there's somebody who needs kind of a voice of reason in their life, I usually don't make the pitch, as you know, Bobbi, to pester your friends about listening to your show. I generally don't like them. Like, whatever. But if somebody really needs to hear this right now, it might be a good time to have your friend tune into Money with Friends to get a little bit less panic and a little more solid advice in your corner. Because I love, Bobbi, not just what you and I do, but what our cast is doing for us. Between all of our cast members, some great minds who are well worth paying attention to.
Yeah. And actually, a lot of our cast members are also freelance writers and so on. So we'll start tweeting out some of the stories that they are writing as well. I know Kristen Wong is writing a lot of stories. Aaron Lowry is writing a lot of stories. So we're going to share those on our Twitter as well. So look out for that. Make sure to follow us at Money Friends Pod and support them.
Speaking of cast, tomorrow we've got a great show for you. Bobbi is here with another member of our cast. Who's with you tomorrow?
Chad Parks. And I know one of our stories is going to be a good news story, off topic on purpose.
It's about time.
Yeah.
We need one. It's about time. If there's anybody who can share a good news story, it's Chad Parks. By the way, somebody who's up on the markets and retirement planning and all that stuff.
We'll also be talking about retirement planning in this environment. That's the other story we'll be talking about. I think I'm not sure which one is Tuesday and which one's Wednesday.
That's fantastic. Well, tune in tomorrow to Bobbi and Chad Parks. We'll see you again tomorrow back here at Money with Friends. Bye-bye. Bam. Nice job, guys. Kelly, Chris, thank you very much. Ashley, thanks a ton. I hate to record and run, but we got to go.
Bye, everyone.
See you later.